Thank you so much, Jordan, for joining us here at the Dwellynn Show. I'm super excited to have you on the show. We've been trying to get this going for quite some time, actually, so it's really good to have you on the show eventually.
Great to be with you all. I appreciate it.
Awesome. Jordan, you're a legend in the industry. You've done a ton of work. I can read your profile here, but I'm sure you can do a way better job. Just kind of tell our Dwell listeners a little bit about yourself and kind of what you've been doing, lately.
So I've been a personal finance journalist for about 40 years. I was at Money Magazine for 18 years. I've done 13 different books on different financial topics, including some on real estate. My website, moneyanswers.com, I've got a Money Answers show, a radio show I've been doing for many years. I do a monthly newsletter. I've got a YouTube channel. I've got lots of resources. I just love to help people in all aspects of personal finance, particularly related to real estate.
So real estate, right? That's like the big one for us here at Dwellynn. And, let's just kind of jump into it. I mean, how did you get started in real estate? I know you've been doing a ton of stuff for, helping Americans, just how did you get started in real estate in particular?
Well, I would say when I was at Money Magazine, I was doing stories about it and learned about resources that can help people do better in real estate. And there's a lot of things that traditional banks will never tell you about, that they don't want you to know about particularly because it doesn't profit them. So some of the things we're going to talk about today are kind of non-traditional, I guess you might say. And I really have made a major difference in a lot of people's lives, helping them pay their mortgage off literally 25 years faster than they ever thought possible, for example.
All right. So even I'm definitely interested in that. So let's just jump right into it. I've been reading a lot about you, and there's this mortgage optimization strategy. So can you just tell us what that is?
Sure.
How can we do that?
So that's exactly what it's called. It's the mortgage equity optimization strategy. And the bottom line is it literally allows you to pay off a 30-year mortgage in about 5 to 7 years, something like that, which is amazing for a lot of people. And your bank is never going to tell you something like that exists. They like in fact, I'll just tell you the existing system and how the new system is better. The existing system is you keep your check sitting there earning zero, and then you pay for 30 years on a mortgage. All the interest is up front. First 10 to 15 years, you pay almost no principal, very, very little principal, and you're paying interest and interest and interest. And then if you refinance the mortgage, you start a new 30-year clock all over again. And even if the rate and the payment may be down, you've just thrown away, 10 years of interest you just paid. So the bank thinks the existing system works really, really well. Okay. Now, the new system, the mortgage optimization system, instead of having your money work for the bank, your money is working for you. Okay. And you use what's called a home equity line of credit, HELOC, which is a liquid line. It's a second mortgage against your house. But the difference is you can put money in, you can take it out. It's completely liquid. With a traditional first-year mortgage, lien mortgage, you can put money in, you can't take money out. You can't write a check on your mortgage. Okay. So that liquidity allows you a lot of progress on paying your mortgage down much, much faster than you would otherwise think possible. So I'm just going to give you an example. So say you have a first mortgage let's say your house is worth $300,000. Say your first mortgage is $200,000 at a good rate, say 4% rate, something like that. You would go and get a HELOC, home equity line of credit, for say $50,000, just to give you an example. And you just open it up, so you haven't used it yet. You would write a check on that HELOC for $50,000 towards the first. So now on the first, instead of owing $200,000, you owe $150,000. And you owe $50,000 on the HELOC, okay? You then use that HELOC almost like your checking account. You keep money, which normally would be sitting in your checking account, in the HELOC. You put money in all the time. HELOCs are based on what's called average daily balance. How much do I owe today? So the balance is constantly moving down as you keep income in there. So every day you're making progress on the principal, as opposed to the traditional system where once a month, you make very, very, very small amount of progress on the principal. Depending on your cash flow, the more cash flow you have, the faster it gets paid down. After, say, a year, that $50,000 is paid off, and then you do it again. You write another $50,000 check towards the first, so instead of $150, it's $100. Over the next year, you pay the HELOC off to zero. You do it twice more. So after 4 years, roughly, your first mortgage is paid off, and the 5th year, you pay off the HELOC, and you are now mortgage-free. Okay, that's an oversimplified example of how it works. But your money is constantly pushing that principal down every day, and you're making progress on it. There's a free website that people can actually model this for themselves. which is called truthinequity.com. And you go on there, you fill in what's called a personal profile, which tells you everything about you, your income, your expenses, value of your house, your mortgage, all those things. And it's going to say, based on the numbers you just gave us, you're going to take 28 years to pay off your mortgage as you're doing it right now. And with those numbers, it'll be 6.2 years, however it comes out to be. And then step by step, they show you how to do it. So that's, in brief, how mortgage equity optimization works. Does that make sense to you?
Yeah, absolutely. That's fantastic. So let's kind of dig in a little bit.
Sure.
And I know you've got a book on this as well, but just for our Dwell listeners, yeah. So when you take out the 50,000, you pay that towards the principal, right, of the mortgage, right? So now your ELOC account is zero, right? And then you say you basically pay money into the ELOC every month. So is that like you just get all your paycheck and just apply that to your ELOC?
Correct. You know, you would link your HELOC to your checking account electronically. So they're not going to typically make your paycheck go into the HELOC directly, but your paycheck goes into your checking account. Electronically, you transfer it into the HELOC, and it's there, and then you pay your bills out of the HELOC as well. Now, even better, if you can have all or most of your bills on one credit card, then you basically pay one bill a month. So your utilities and your food and whatever it may be, if you can pay one bill a month, then you're making every day your balance is going down a little bit. Once a month, when you have to pay your bill, it goes up. But most of the month, you're constantly making progress on your balance. That HELOC is going down all the time. There are three things you need, Ola, to make this work. First thing, you got to have equity in your house. If you're underwater, there's nothing to borrow against. Second thing, you got to have a decent credit score. I would say 680 or higher in order to qualify for that HELOC. The third thing, you need positive cash flow. During the month, more money coming in than going out. And the more positive cash flow, the better it's going to get. That positive cash flow is what's pushing that HELOC balance down on a regular basis. So I bet the vast majority of your listeners have those three things. And literally, I've just saved them 25 years off their mortgage and tens of thousands of dollars of interest that they don't need to be paying.
Wow. Yeah. Thank you for that. I mean, people have to pay a lot for that kind of information. And yeah, we are, you're giving it for free. So I definitely appreciate it. Definitely appreciate it. So there's another thing I want to talk about. So we all know, and you've touched on this a little bit, that, when we have a mortgage, the mortgage companies, stroke banks, that would basically ensure that your first payment, probably for the first 10 years or so, you're all paying interest, right? Let's say, for example, your mortgage is $1,500, right? You could be paying $1,000 or even more just towards the interest, right?
Correct.
And then $300 or $400 against.
Even less than that, right? In the first early years, the same $1,500 payment. In the early years, it's almost all interest. You get a little bit more principal. At the end, the principal is paid off. But it's pretty much front-end loaded, paying the interest. That's correct.
So how can we verify kind of the loan and escrow payment and PMI on our mortgage? How can we do that to make sure that we should be paying what we're supposed to be paying?
There's a lot of mistakes on mortgage, particularly adjustable rate mortgages all the time. Now, an adjustable rate mortgage, the rate goes up and down based on some index. Maybe it's a spread over LIBOR, over the prime rate or something like that. And a lot of banks make mistakes. And particularly your mortgage may be sold from one bank to another, or another mortgage servicing company, and they make a lot of mistakes when that happens. There's actually a service that does it for you, which is called verifymymortgage.com. They've got a phone number as well, actually, 800-888-6781. And they get your original mortgage, and they see what payments you've been making, and then they see they know the indexes and so on, and they see what you should have been paying. And like 40 to 50% of the cases, you've been paying too much. And then they write a letter saying, here's how much he's overpaid. Give him a rebate of $8,000, whatever it may be. And then here's the new payment that should be made. The banks will never do that for you. And they don't think they're doing anything wrong, but lots of mistakes are made all the time. So that's the mortgage payment. The second one you mentioned is escrow. Now, escrow is where you're putting money aside for paying property taxes and property insurance. Many, many times, the bank is over escrowing. They're taking too much to pay property taxes and insurance. And the same thing, you can do a verification of that, verifymyescrow.com. And in many cases, that you're going to get a lower escrow, and therefore your payment will be less because they're taking aside too much for property taxes and insurance. And the third one you mentioned is private mortgage insurance, PMI. And the same thing, verifymypmi.com. PMI, private mortgage insurance, is where you're paying the lender to insure them against your defaults. I hate paying for something where I don't benefit. I'm paying for somebody else to benefit, actually. Now, in theory, you have to have over 20% equity in your home to get rid of PMI. Now, a lot of people probably have over 20% equity in their home, but they don't know it, and therefore they're paying PMI when they really shouldn't be. There are many ways to get over 20% equity. The value of your home could appreciate in an area that's growing. Maybe you made an addition or a kind of renovation that increased the value of your home. Maybe you made extra principal payments on your mortgage. Maybe you did the mortgage optimization we just talked about, and you're getting equity much faster. And all those things can allow you to get over that 20% hurdle and save hundreds of dollars a month in PMI payments you don't need to be making. So the same website for that, verifymypmi.com, same phone number, 800-888-6781. The same people verify your mortgage, your escrow, and your PMI. And in many, many cases, they find mistakes, and you can literally save hundreds or thousands of dollars. You don't even know you're overspending.
Wow, this is amazing. This is really, really good, like really great information. So if I'm a Dwell listeners listening on our conversation, and I want to go on those websites and I, verify my escrow, verify my mortgage insurance, and I find out that I'm overpaying, how difficult, because the reason most folks don't do this is they don't want to, spend so much time and back and forth with these agencies. And how easy is this, to do?
So what happens is, say you're in your mortgage, say you've been overpaying on your mortgage. The people at verifymymortgage.com give you a detailed letter saying, here's the original contract, here's what you actually paid for however many years it was, here's what you should have paid. And then you have a letter verified in all kinds of ways with all kinds of backup, which you send to the right place at the bank, and they have to do it. Now, if they refuse, the Verify My Mortgage people will get involved and talk to some senior person at the bank and say, look, you've been making a mistake for a long time. Here's the proof. And they can't dispute it. It may be easy, it may not be easy, it depends on the bank. But usually if you can prove that you've been overpaying, the bank is a regulated industry. They have to do what's right. And if you've been overcharged, they've got to not only give you a rebate of what you overpaid, but change your payment so it's now accurate. So it's not that difficult. You don't do the work. You basically send this letter from the service, and if need be, they'll intercede on your behalf and make sure it gets taken care of.
Fantastic. I love that. Thank you so much for breaking that down. So you also mentioned, when we're talking about the mortgage optimization strategy, that typically you need a good credit score of 680 or above. Right. So correct. There might be somebody listening to this and thinking, well, I don't really have great credit, I don't really know what to do. So can you talk a little bit more about, how we can, help folks who want to kind of increase their credit score?
Yes. So you're right. I mean, in order to qualify for the HELOC, you've got to have decent credit. And if you don't have credit, you've got to do some things to improve your credit over time. I like to say credit goes up slowly and carefully with lots of good experience over many years, and it goes down quickly with one wrong mistake. So you got to kind of build it up. It's not as though you do one thing and all of a sudden your score goes up to 800 or something. It's a long process of many years of a good experience. So what you want to do is, first of all, see what your credit is. You can get it free. Creditkarma.com would be a place, for example, to get it free. See what it is. See if there are errors on there. About 40% of people's credit reports have errors. Sometimes something you did, in many cases something you didn't do at all. Somebody is confused with you with the same name or the same social security number, similar address. Whenever you get confused with somebody else, their credit is always worse than yours. You don't get confused with Warren Buffett or Bill Gates, right? You're a billionaire. It's like some deadbeat, right, who's never paid their bills. Those are the people you get confused with, okay? So, and then you see that there are errors. Now, in theory, you can challenge them yourself, but the reality is, for most people, it's going to be very hard for them to actually do that and take the time and battle and all that. There's a place called Better Qualified, and their website is tourdecredit.com, Tourde credit.com. And that's all they do is get errors off your credit report. Now, there's a law called the FACTA law, the Fair and Accurate Credit Transactions Act, which says you have the right to challenge errors in your credit report. And in theory, if they're wrong, they have to be taken off within 30 days of you telling the credit bureaus they're wrong. Now, the reality is you have to challenge it with the original creditor who put it on there in the first place. And in many cases, they don't get back to you. I mean, say you had something wrong with Sears. Well, Sears is going out of business. They're not exactly going to be spending a lot of time correcting errors on people's credit reports from 10 years ago or something, right? So that's what these tour de credit people that do, is they do the battle on your behalf, and every error there you go, and then when your score goes up, you can qualify for more credit at better interest rates, and your life is just that much better.
Wow, fascinating. Thank you so much for that. So there was also something I read about you. You have a program, the special mortgage deals for American heroes. I thought that was really, really amazing. Thank you so much for what you're doing there. So can you just tell our Dwell listeners a little bit more about that program?
Absolutely. So it's called Heroes Come First. And what it does is, a hero is defined as anybody in the military, both currently in the military or veterans, National Guard, anything like that. It would be doctors, anybody in the medical field, nurses, any kind of medical people, firemen, policemen, emergency medical technicians, EMTs, dentists, teachers, clergy. Those are the different categories. People who are kind of giving back. You know, you think of like the wildfires in California, everybody's getting out of there. Well, these are the people rushing in, everybody else trying to out. So it's nice to say thank you to them, but this is an actual way that those people can save a huge amount of money on buying or selling a home or getting a mortgage in various ways. So it's called Heroes Come First, the website heroescomefirst.com. They've actually got a phone number, 888-437-6114. And here's how it works. When you buy a home, you get a quarter of the real estate agent's commission back as a rebate, which can be thousands of dollars depending on the price of the home. The same thing, when you sell your home, you can get a rebate of a quarter of the real estate agent's commission when you sell your home. You get a discount on the mortgage rate and all of the different closing costs involved in the transaction. That would be attorney's fees, appraisals, escrow, all the things that are involved in a mortgage closing. They give you discounts of various types. It can add up to thousands of dollars. They also have a grant of up to $10,000 towards your down payment on a first home. I think if you're active duty military in that particular case. So what you do is you go to that website, heroescomefirst.com. Then you connect to a realtor and the people who do the closing where you're located, and you use them. And I just saved you thousands of dollars on buying and selling a home and all the mortgage and all the closing costs involved. It's a way of giving back to people who are normally giving to us. You know, you might go to the airport and say, thank you for your service, but I'd rather give them thousands of dollars. And that's what Heroes Come First can do.
Wow. Thank you so much. Thank you so much for that. We're definitely going to be dwelling into the quick round. So these are going to be quick questions, quick answers. And I know you have a book. We'll talk about that after the quick round. So the first question is, what makes you, Jordan, unique? What is that differentiating factor that separates you from the next guy or the next girl?
Well, as you can see, I have a lot of unique resources that can make a major difference in people's lives. Most people just kind of know the traditional stuff. They've never heard about mortgage optimization before. They've never heard about Heroes Come First or Verify My Mortgage. These are new things. I've been doing this for 40 years. I've seen all kinds of resources. I check these things out very carefully. So I think I offer some resources that most people have never heard about before.
Yeah, you sure do. You definitely sure do. Second question. I mean, I can tell you're a reader. Just looking at your background. For those listening on the podcast, Jordan has a massive bookshelf full of books. So, what was the last book that you read, and what was the one thing that you picked out from that book?
Well, there's a book by Rick Edelman called. It's about your money futures. I think is what it's called, and he talks about all of the different technologies that are changing. And you can either have them roll you over, or you can have them on your side. Things like artificial intelligence, robotics, 3D printing, cloud computing, biotechnology. There's just a lot of new technologies out there which are disrupting the world. So people lose their jobs because of these things. He has a whole system of investing in these things where, in fact, you have all these companies working on your behalf. There's an exchange-traded fund he has, for example, called the Exponential Technologies Fund. XT is the symbol for it, where it has about 200 or something of these companies that are in there. So all these disruptive technologies are working on your behalf instead of against you. So that's just one idea of a book I read recently.
Thank you so much for sharing. I will definitely put that in the show notes. So you're an author, you show your family man, you've got books, you've got your career going, you're doing a ton of stuff. What do you do for fun?
Music and sailing and walking and music and all kinds of fun things. I try to have some fun as well. I'm very productive. I did a dictionary of financial terms called the Dictionary of Finance and Investment Terms. I just came out with the 10th edition of that. The first one came out in 1983. And so all the new tax laws, for example, just came out, so I had to update it for that. And I'm doing all these podcasts, and I'm doing things at moneyanswers.com, my weekly newsletter, and I'd like to give a lot of information to people, and I've helped a lot of people over the years, and hope I can help the Dwellynn listeners as well. In fact, I've created a separate landing page specifically for your listeners that may be helpful to them, and that landing page is go.moneyanswers.com/Dwellynn, and you'll see some links to some of the things we talked about. They can get my free newsletter. So again, I'm trying to help your listeners as much as I can.
Thank you so much. Definitely appreciate that. So if you have a dual listener that just saying, wow, I really love what Jordan is talking about. I want to get rid of my mortgage in 5 to 7 years. I want to do this. I want to learn more. I want to get your newsletter, connect with you. What is the best place that you're most active, and how can people reach out and connect with you?
So moneyanswers.com is my website. There's a little Ask Jordan thing there. You'll see all the different resources. Sign up for my free newsletter. You can look at my YouTube channel, listen to my weekly Money Answers radio show. So moneyanswers.com is the central place for finding all these things about me. And we've just touched the surface, and I've done these resources pretty much related to real estate, but I've got things on all kinds of other financial topics as well.
Thank you so much. I really appreciate your time today. I'm sure there's going to be some listeners that will reach out to you to learn more from you. Thank you so much.
Very good. Thanks so much, Ola. Appreciate it.